Every single year, over 50 million Americans purchase travel insurance, and more than half of them have absolutely no idea what they actually bought. They hand over anywhere from $50 to $500, tuck that little policy document into their email inbox, and never look at it again.
Until the worst possible moment.
Until they are standing at a foreign hospital reception desk, passport in hand, wondering why the insurance company is telling them their claim has been denied.
That number is not an exaggeration.
According to the U.S. Travel Insurance Association, claim denial rates for improperly filed or misunderstood policies hover around 30%.
That means roughly 1 in 3 people who think they are protected are not. In the next 10 minutes, you are going to understand exactly how travel insurance works from the inside out.
We are going to break down what it actually covers, what the insurance companies quietly hope you never read, and the single biggest mistake travelers make when filing a claim. There is also one counterintuitive truth buried inside most standard travel insurance policies that almost nobody talks about, and once you hear it, you will never buy a policy the same way again.
Travel insurance is not a new idea.
The concept of insuring a journey goes back centuries. In the early days of ocean shipping, merchants would pay a premium to protect the value of their cargo against the very real possibility of shipwreck.
As commercial passenger travel expanded in the 19th century, the same logic applied to people rather than goods.
One of the earliest modern travel insurance companies, Travelers Insurance, was founded in 1864 in Hartford, Connecticut. The story goes that the founder insured himself against injury on a walk from the post office to his hotel for 2 cents.
That is roughly the same philosophical foundation travel insurance operates on today.
You pay a small fraction of your total trip cost to protect against a loss that would be far greater.
The modern travel insurance industry generates over $4 billion annually in the United States alone. Globally, that number sits closer to $23 billion.
And it is growing fast, especially in the wake of the COVID-19 pandemic, which taught an entire generation of travelers exactly how quickly a trip can collapse with zero warning and zero refunds waiting on the other side.
So what does travel insurance actually cover?
There are 6 primary categories, and understanding each one is the difference between a policy that saves you thousands and a piece of paper that does nothing.
The first is trip cancellation.
This covers you if you need to cancel your trip before departure due to a covered reason. Key phrase there, covered reason.
We are going to come back to that.
The second is trip interruption, which kicks in if your trip is cut short after you have already departed. Third is travel delay coverage, which reimburses you for meals, accommodation, and sometimes lost prepaid bookings when a delay stretches beyond a certain number of hours.
Fourth is emergency medical coverage, which pays for treatment you receive abroad.
Fifth is medical evacuation, which can be the single most valuable component in the entire policy. We are talking potential costs of $25,000 to over $100,000 to be airlifted to an adequate medical facility. Sixth is baggage and personal belongings coverage for lost, stolen, or damaged items. Now here is what nobody talks about when they describe those 6 categories. Each one has what the industry calls a covered reason clause.
This is not a minor footnote.
It is the entire architecture of whether your claim succeeds or fails. Trip cancellation coverage sounds comprehensive until you read that it only applies to a specific list of qualifying events. Things like sudden illness, death of a family member, jury duty, or a natural disaster. If you cancel because you simply changed your mind, you found a cheaper flight, or you were scared of unrest in a region, those are not covered reasons under a standard policy. That is where 30% of denied claims come from. The solution to this specific problem is a policy feature called Cancel for Any Reason, or CFAR. This is an optional upgrade, typically adding between 40 and 60% to the base premium, and it does exactly what it sounds like. You can cancel for literally any reason and receive a reimbursement of typically 70 to 75% of your prepaid trip costs.
Not 100%, that distinction matters. But 75 cents on every dollar is dramatically better than zero. Here is a number that should make you sit up straight.
The average emergency medical evacuation from Southeast Asia to a U.S. hospital costs between $50,000 and $150,000.
Your regular health insurance, including most major U.S. providers, covers little to nothing abroad. Medicare covers nothing internationally. Medicaid covers nothing internationally.
If you are traveling outside your home country without a travel insurance policy that includes emergency medical and evacuation coverage, you are one bad fall, one food poisoning incident, or one car accident away from a financial catastrophe that could take years to recover from. This is where the real value of travel insurance lives. Not in the bag you lost. Not even in the canceled flight. It is in the scenario that feels impossible until it happens to you. In 2019, a California family was billed $450,000 after their teenage son required emergency cardiac surgery while traveling in Canada. Canada. One of the most medically developed countries on Earth. Still, $450,000. Their travel insurance policy covered the full amount. Their out-of-pocket cost was the premium they paid before leaving home. So how do you actually use travel insurance when something goes wrong? The process matters enormously, and this is where most people make their biggest mistake. The moment something happens, flight cancellation, medical issue, theft, you need to document everything in real time. Save every receipt. Photograph every interaction. Get written confirmation from airlines, hotels, and doctors. Insurance companies operate on paperwork. A verbal account of what happened is worth almost nothing to a claims adjuster. A folder of time-stamped receipts, police reports, and official airline documentation is worth everything. There is also a timing requirement embedded in nearly every policy that travelers miss completely. Most travel insurance policies require you to file your claim within a specific window, often 90 days from the date of the incident. Some require notification within 24 or 48 hours for certain types of claims. If you come home from a 2-week trip, spend 2 months recovering, and then decide to file a claim in month 4, you may have already voided your right to any reimbursement regardless of how legitimate your claim is. Another deep layer that most buyers never investigate is the concept of primary versus secondary coverage. A primary travel insurance policy pays your claim first, directly, without requiring you to exhaust other insurance sources. A secondary policy only pays what remains after your other insurance has already denied or partially covered the claim. If you are buying travel insurance primarily for the medical coverage, always confirm whether the policy is primary or secondary. Secondary coverage sounds adequate until you are filling out forms for 3 different insurance companies in a foreign language while running a fever of 103. The travel insurance market itself has also become significantly more sophisticated. Modern policies increasingly offer parametric travel insurance, where payouts are triggered automatically by measurable events rather than claim submissions. Flight delayed beyond 6 hours? The payout is automatic. Destination received more than a defined threshold of rainfall during your resort week? Automatic payout. No paperwork, no adjuster, no dispute. This model is still emerging, but companies like Fay and Battleface are pushing the entire industry toward real-time, app-based claim resolution that takes the friction almost entirely out of the process. The bottom line across everything we have covered today comes down to 4 principles. First, read the covered reasons before you buy, not after something goes wrong. Second, consider cancel for any reason coverage anytime your prepaid trip costs exceed $1,000. Before you go, if you learned something valuable today, hit that like button right now. Subscribe to TravelSphere for a brand new video every single day. We will see you in the next one.